Happy Friday, everyone. Thanks for joining us today on this edition of Business Daily. I'm Lee Ji-yoon in Seoul. Let's get started with a look at the day's highlights. Despite last year's Galaxy Note 7 debacle, Samsung Electronics says it expects its best operating profit in 3 years thanks to its chip and display divisions. With about 2 weeks to go until U.S. President-elect Donald Trump is inaugurated, American businesses are also getting ready to respond to a wave of changes. These stories and more coming right up. The world's largest smartphone maker, Samsung Electronics, has posted an earnings surprise for the fourth quarter of last year. Despite the global recall of its Galaxy Note 7, an uptick in the company's chip businesses likely negated its impact on Samsung's bottom line. Our Kim Min-ji starts us off.
It's the tech giant's best report card in more than 2 years. Samsung Electronics is estimated to have posted an operating profit of 9.2 trillion won, or roughly $7.8 billion in the fourth quarter of last year. That's up a whopping 77% from the previous quarter and almost 50% from the same period in 2015. Sales came to about $45 billion, up 10% from the previous quarter, but down 0.6% on year. The forecast on operating profit beats a market consensus by almost $1 billion and is the first time to top the 9 trillion won mark since the third quarter of 2013. It's also a significant turnaround from the $4.3 billion it posted in the third quarter, which reflected losses from the ill-fated Galaxy Note 7 smartphone.
This time it's mostly a semiconductor play, so more than half the profit is coming from the semiconductor division, but that's kind of also propelled by the smartphone market, whereas you can see the feature sets in smartphones is getting richer and more improved. So the required memory content has to increase, so that's boosting the memory division. But Samsung's smartphone division, they're not enjoying the extra boost they used to have in Q4 because they don't have the Note 7.
Analysts also say steady sales of flat panel displays, favorable currency exchange rates, and solid sales of Galaxy S7 smartphones help boost Samsung's bottom line. The tech giant will announce its finalized earnings with a breakdown of performance by unit later this month. For the first quarter of this year, Samsung is expected to maintain its strong upward momentum, boosted by its chip and display sectors. But what could put a damper on this is the results from Samsung's internal investigation into the cause of battery explosions in some of its Note 7 handsets. Depending on the results, it could hurt consumer trust and possibly the company's earnings. Kim Min-ji, Business Daily.
And moving on to markets, to give us a wrap-up of this week's stock market action, we have our Business Daily's markets contributor, Choi Jin-seok, joining us on the phone today. Hello, Jin-seok.
Thanks for having me.
All right, so as we close the week, how are things looking on the last day of trading?
Robust earnings reported by Samsung Electronics lifted overall sentiment in the Korean equity market today as well. The Kospi rose by 0.3% to close at 2049.12, helped mostly by foreign investors who bought massive amounts of shares. The index has been in positive territory throughout the session, and it once touched above the 2050 level as well. By sector, semiconductors performed relatively strong. Meanwhile, the Kosdaq market fluctuated all session long, closing at 643.68, up by 0.1% compared to the previous session. The market opened the session with a slight uptick, raising expectations for 8 consecutive rises. However, foreign investors and institutions who unloaded shares during the session limited further uptick.
So then how is the overall weekly performance? I mean, the year start doesn't seem bad at all.
Right. On a weekly basis, both the Kospi and the Kosdaq rose around 1%, and all types of stocks, including large caps to small caps, enjoyed a rally throughout the week. Economic indicators from the U.S. and China came out with a positive picture, raising expectations for more rapid global economic recovery. Better sentiment was especially reflected in foreign investor stop buying. By sector, automakers, semiconductors, and securities firms performed strong, while consumer staples, hardware, and steelmakers performed weak.
Now, with the earnings guidance from Samsung Electronics today, the Q4 earnings season has officially kicked off. So do you think robust earnings can help the overall market rise further?
As you heard earlier, Samsung Electronics beat market expectations by a large margin for fourth quarter earnings. And since there's a strong correlation between share price movements of Samsung Electronics and the entire Kospi index, expectations for a potential market rally are now surging. From 2011 to 2016, the company and the Kospi index have shown a 75% similarity in movement. The company's market cap accounts for about 20% of the Kospi market as well. Therefore, the company's earnings can definitely be a very positive catalyst for the entire market. This has been Choi Jin-seop for Business Daily.
Japan has announced they will halt discussions with Korea aimed at a new currency swap agreement in protest against the recent installation of a statue symbolizing Korean sex slaves under Imperial Japan. According to Seoul's finance ministry, although two countries have been in discussion regarding the scale and timing of a new currency swap agreement since August of last year, Japan abruptly announced they will no longer pursue the deal due to political reasons. A Seoul-Tokyo currency swap had been in place starting from 2001 and grew to as much as $70 billion in 2011. It came to an end early 2015 and has not been extended since. Egg imports from the U.S. are expected to arrive here in Korea before the Lunar New Year holiday starts at the end of this month as part of an effort to ease a supply shortage sparked by the country's worst bird flu outbreak. According to the Ministry of Food, Agriculture and Rural Affairs, the government has confirmed detailed support measures regarding egg imports on Friday and agreed to subsidize 50% of shipping fees to local firms up until the end of February. This is projected to cost about $760,000. The Korean government is also in talks with other countries like Spain and New Zealand, which have expressed their intentions to export their eggs. Driverless cars are proving to be one of the biggest draws at this year's Consumer Electronics Show. Within the next 10 to 15 years, the chances are that we will be whizzing around in cars that can navigate the streets without us touching the steering wheel. And Korea's Hyundai Motor is among a dozen automakers showcasing its latest self-driving car in Las Vegas. Our Park Jong-hong has this report.
Self-driving cars promise to enrich lifestyles by allowing users to read newspapers, watch a movie, and even take a nap behind the wheel. At this year's Consumer Electronics Show in Las Vegas, this vision is more tangible than ever. More than 10 booths set up by Mercedes-Benz, BMW, Ford, Toyota, and Korea's own Hyundai Motor are highlighting their state-of-the-art technology. In a media demonstration, Hyundai Motor Vice Chairman Chung Hee-sun personally got behind the wheel, not to steer it, but rather to drink coffee and look through some documents. Hyundai claims its self-driving car doesn't require human intervention even in regular traffic situations, stopping smoothly when objects or people pop up out of the blue. The key to such responsiveness lies in the sensors and camera mounted on the mirror inside the vehicle.
Seamlessly interacting with other vehicles and with the outside world for greater safety and convenience.
And convenience seems to be the greatest benefit of such self-autonomous cars. Hyundai Motor plans to complete testing by 2020 and roll out the completely autonomous car in 2030. Just a few years ago, Google cars with radars mounted on the roof seemed like the only option for consumers. But now, more than 10 major automakers have jumped on the self-driving bandwagon and are making significant strides. Once a self-driving car is commercialized after thorough safety testing, it can save time for people, especially on long commutes, helping them spend time doing more productive things or simply getting some extra shut-eye. Park Jong-hong, Business Daily.
Well, we made it to Friday, and it's time now to discuss some global business headlines from the first week of 2017. And for that, we're now joined by Eunice Kim in the studio. Hello, Eunice.
Hello.
All right, so what an action-packed week it has been, especially for those who have been following U.S. President-elect Donald Trump and his Twitter feed.
Yeah, you're absolutely right. So policy is typically announced after significant vetting and also consideration, not on a 140-character tweet. But we are seeing that President-elect Donald Trump is doing things his way, and he's not about to slow his tweeting anytime soon, as we are 2 weeks away from Inauguration Day. Take a look.
From thanking Ford for keeping jobs in the U.S. to quoting Julian Assange and raising suspicions about America's own intelligence agencies, U.S. President-elect Donald Trump's Twitter feed is already shaking things up. The Mexican peso dropped to a fresh record low on Wednesday to 21.619 peso against the greenback. This came just hours after Ford Motor Company announced it will scrap plans to build a $1.6 billion plant in Mexico and pour some of that money into a Michigan plant instead. And it's not just U.S. auto companies. Trump called out Toyota just hours ago, threatening a big border tax. Already, business leaders across industries are drawing out Plan Bs.
I think that it's something that companies will have to prepare for. That is, I've already read that Apple, for example, has done a contingency study to see how much it would cost if they moved manufacturing back from China to the United States. Other companies are probably doing the same sort of thing. So a lot of companies and people are assessing Trump to see whether he's serious, or I think increasingly the evidence is he's serious.
Trump's tweets also extended to other parts of the world, including the Korean Peninsula. North Korea just stated that it is in the final stages of reaching parts of the U.S., he wrote. It won't happen. In the next breath, he accuses China of taking massive amounts of money out of the U.S. in one-sided trade, but won't help with North Korea. China's foreign ministry rejected this notion, adding all sides should avoid remarks and actions that escalate the situation. Xinhua news agency said diplomacy is, quote, not a child's game, and Twitter should not be a foreign policy tool.
He's going to keep doing it, right?
Of course he's going to keep doing it, but I think
Trump's team points out that the president-elect's tweets get results. Seoul is closely watching the online jabs. Jungang Daily reporting on Thursday, an officer at the foreign ministry has been tasked with monitoring Trump's tweets, since little else is known on the details of his foreign policy.
So it looks like we're already seeing tensions between the incoming Trump administration and China playing out on the public sphere. But as we talked yesterday with an expert, this could only strengthen the concern that a trade war might be brewing between the two countries.
Right, or Trump is simply posturing at this point, sending a message that the U.S. is not going to be just, a wallflower. It will be a force to be reckoned with. Now, this week, the president-elect appointed his chief trade negotiator, Robert Lighthizer, known as another strong critic of China's trade policies. He is a career trade lawyer and a known free trade skeptic. He's been tapped to head the U.S. Trade Representative Office, which is the office that had negotiated the TPP trade deal under President Barack Obama. So Lighthizer is known for advocating raising taxes on imports over lowering them. So his positions look to align with what we've heard from Trump so far.
So geopolitical tensions are expected to be one of the big unknowns for the new year. And of course, China and the United States are smack in the middle of it. But let's get an update on another potential risk. Over in the UK, we hear that the man who was to lead Brexit negotiations with the European Union has tendered his resignation.
Right. And this was received as a big loss among the political circles in London, in part because Prime Minister Theresa May has, of course, promised to trigger Article 50 by the end of March, and also because Ivan Rogers was viewed as one of the few in the May government who understood the ins and outs of the European Union. In his resignation letter, Rogers urged his now former colleagues to challenge, quote, muddled thinking and speak truth to power, as he noted the, quote, serious multilateral negotiating experience in short supply in Whitehall. Prime Minister Theresa May quickly tapped Sir Tim Barrow, a career diplomat, as the next EU ambassador. And finally, oil production cuts from OPEC and its non-OPEC partner countries have begun as crude oil producers aim to raise prices by shrinking supply. They had promised to reduce production by a combined 1.2 million barrels a day. A source familiar with Saudi Arabia's output told the Wall Street Journal OPEC's biggest producer had, quote, completely implemented the cut, if not more. Meanwhile, the kingdom's state-run oil company Aramco said it has raised prices for some of its key East Asia customers. That would include Korea, Japan, and China. The region accounts for almost 2/3 of Aramco's crude exports, according to its 2015 report.
Well, let's definitely hope that this rise in oil prices will help to boost struggling economies around the world, including Korean exporters.
Yes.
Thank you so much for coming in today.
You bet.
And that wraps it up for today and this week. Thanks so much for watching, and we'll be back next week with more business news that matters to you. Until then, goodbye.